Hello, everyone. I'm Kavita Agrawal, the founder of EXP-Invest. And today we are here to talk about JKP and how we booked a matter of 25% profits in just 68 days. In this session, I will be telling you what are the indicators that I used, what are the settings that were applied on the indicator, what were the observations made, and side by side, we will also build the investment case. These observations helped us not only enter the stock at the right time, but also manage the stock in a very optimal way. At the end of this session, I will also tell you about an upcoming opportunity that I have spotted in the stock, and I will also tell you how to make the best entry for this opportunity. So, this is the paper chart, and we entered the stock on 6th of July, somewhere around the level of 311. The exit subsequently happened on the 11th of September or at the level of 390. If you look at the return profile, like I said, it's around 20% profit in days. As you can see, before we entered, the stock experienced a sharp downtrend. And if you look at the stock of JK Paper specifically, you will notice it has a tendency to create a double top before it goes into a correction. And after that correction comes an opportunity to make an entry. This pattern of behavior is repeated on multiple times. Like here also, you will see this upside that we captured was also ended. So this upside, this also ended with a double top formation, which then soon unfolded into a correction. So let's first analyze why did we take this opportunity. Now to introduce my trade setup or my chart layout. This is the 75-minute time frame of JK paper. And on the indicator side, we have two main indicators that we use. One is the RSI, one is the exponential moving average. Now, of these two indicators, we use multiple versions, you can say. We use 25 period RSI on 75-minute chart. We use the 25 period RSI on the 15-minute chart. We use the 20 period RSI on the daily chart. In the exponential moving average front, we use the 500 EMA in gray color, the 200 EMA in blue color, the 20 EMA in light blue color, 100 EMA in green color, and the 50 EMA in the yellow color. The reason why JK Power came into our radar was, if I go to the daily time frame and show you, two reasons. Number one, the daily time frame was hovering very close to the 500 EMA on the daily time frame. What I have seen is that stocks have a tendency to give strong bounce back when they come close to the 500 EMA or the 200 EMA on either the daily 75 or the 15-minute time frame. A lot of times, when the stock is already ensued or already started an uptrend, it will take a support at the 200 or 500 EMA in the 15-minute time frame and continue. And when a stock is taking a major correction, like in this case, it usually takes a support at the 500 or the 200 EMA on the daily time frame. So the first thing was the stock was very close to the 500 EMA on the day frame. We will start building our investment case. Plus point number one, 500 EMA support on daily. For example, this in short and right as 500 EMA on D. That's it. 500 ED tells me that the stock is close to the 500 EMA on the daily time frame. The next positive item that I noticed was the RSI positive divergence on the daily time frame. If you notice here, so the price forged on RSI on the date of 24th May or 25th May. Here, the price was still at 328 on daily time frame. But by the time the price came down to 6 or 300, which is an important psychological level, the RSI had sustained itself above the level of 50. This gave us the indication that even if the price was falling down, something has changed about the way the price changes when it falls down versus when it rises up. A positive divergence basically tells us that when the price is turning up, so a positive divergence has been noticed here. What the positive divergence on RSI tries to tell us is that when the price is going up, the speed with which the price is changing is faster versus when it is going down. This is why a positive divergence happens. This is a very early indication that a trend change is happening. Another thing that you will notice here is that this phenomena where the volume is increasing when the price is declining. You see here, the volume is strong when the price is down. This phenomena has changed. Now, when the price is declining, the volume is not increasing as fast as it was earlier. If you look at this stage, the volume here is not as high as it was previous. The difference between the 20 EMA of volume and the 100 EMA of volume is not that significant, which means that the downward trend has lost its steam. Not only that, this last leg of the correction that happened, if you see, that happened on declining volume. So here, even if you say that the volume is still on the uptrend, it's fine, because the very last leg of downtrend that we see, right, that actually happened on declining volume, if you can see here. So this was a positive indication for us. So again, on the daily time frame, volume is declining when falling price. This is again an early indication of trend reversal. So what is the reason that we went with this early indication of trend reversal and we did not wait for a confirmation? The reason is risk reward ratio. I saw that entering the stock when the price was still around the 500 EMA gave me a very attractive risk to reward ratio. How is that? Basically, this stock, so if I planned an entry here, my potential stop loss would be somewhere near this level. With a stop loss of 290, target, say if I kept a target of even this level, let's actually take a look at let's go to my stock idea sheet and see what was the target that I had mentioned for JK paper in the first place. So I'm going to find JK paper and I have found the stock. This is it. The target that was mentioned was 152. Exactly. So around this level. So this was my target. Now, what happened? Why did I exit the stock sooner? We will discuss that now. To strengthen our investment case, we will also take a look at the 75-minute time frame. Now, on the 75-minute time frame, as you can already notice, the positive divergence marked here was even more pronounced. In fact, this was not just a positive divergence, this was also a bullish range shift, which means that where the RSI initially broke below the level of 30 and was consistently staying below the level of 60 ever since the price went into correction, now the RSI was sustaining itself above the level of 30, even though the price was in downward trend. So this phenomena of RSI positive or negative divergence that we see is nothing but the point where the RSI moves from the bullish range to the negative range, to the bearish range. This is a very good indication, and observing the range shift on RSI is a very good way of making sure that you are staying with the trend and you are getting in and out of the trend at optimal points. So you want to obviously buy the stock at low prices and sell it at the high price without losing potential upside and without experiencing downside. So observing the RSI positive or negative range can be a very good method of doing that. So here we determined our stop loss, we determined our target. So our target was around 44% initially and our stop loss was only barely 7%. This gave us a very attractive risk reward ratio of more than 5. So we decided to go forward with this idea. So when you're swing trading, it is important to remember that risk reward ratio is the most important number for you. It does not matter how attractive you think a particular trade setup looks. If your reward is only 5% and your risk is also 5%, it is a very bad stock idea to go forward with. It is a very bad trade setup to proceed with. You want to make sure that your reward per unit of the risk that you take is maximum. That is how you will find consistent success in the stock market. So based on the RSI positive range shift, so let's note that down. RSI positive range shift in 75-minute frame. And let's also mention the RSI period, that is 25. Now remember, for the purpose of RSI range shift, I use the levels of 30 and 60, where 40 and 70 become the bull range, 30 and 60 remain the bear range. At this point of time, we set the first stop loss here and made a position. The next job was to identify the resistance level where we will start changing our stop loss. Naturally, for this last leg of downside that we see, the most important resistance is this, which is the peak of this or the starting of this fresh leg of downside. We waited for the price to breach this level. You can see that the price for once took resistance at the level, right at the resistance level, and it went down. This same resistance level, incidentally, was also the 500 EMA of the 75-minute time. The price took resistance, came down, and it text perfection that the stock again took support at the 200 EMA of the 75-minute time frame and went up. Few minutes back, I told you that when you're doing technical analysis, the 200 EMA and the 500 EMA are the most important time frames for you. If you use exponential moving average, make sure that you apply the 200 and the 500 EMA on your charts, because no matter how strong the bull trend, you will find that the stock takes support on the 200 or the 500 EMA at some time frame or the other. This was also the reason why I use multiple time frames for my analysis. So again, the stock took support and finally moved up. it broke above the resistance. When it broke above the resistance, it was time for us to revise our stop loss for the first time. So where should we go? We take our stop loss line and we revise our stop loss to cost. Now, what has happened is that within a month of taking this position, we have 10% unrealized profit, and now the position is break even, which means that even if the stock reverses and falls entirely out, if it completely reverses and goes into a bear trend, we are not losing money from a capital in the stock. And one more thing you need to remember, that when you're doing swing trading, the pace at which you change your stop loss will be different for when your position is fresh versus when you're in a more advanced stage of your position. When you're participating in a trend reversal, you want to be more conservative with your stop loss revision. That is the reason the first stop loss that we've revised has been after 10% upside, because this is a reversion. We don't know yet whether a proper higher high has been forged or not, whether this is a proper reversal or not. We don't want to suffocate our position in advance before it is still time. So now that first resistance is breached, we need to identify the next resistance above which we are going to identify our or revise our stop loss. So this feels a little bit further, but if you look behind, I can see that there is these important low points. And even this entire consolidation zone appears as a pretty good point for me to look out for the next possible stop loss revision, because I don't want to keep maintaining 10% stop loss on the position. So once this level, which got breached almost immediately, it was a signal for me that it's for me to now change my stop loss. So now I will bring my stop loss right below the previous peak. I will now change my stop loss right below the previous low. So this is the low. This is the resistance that got breached, and this was the low. So we will revise the stop loss here. So 326 has become our stop loss. Now let's identify the next possible resistance level. So after this level, the next resistance is somewhere here. Let me duplicate this line here. So you can see that the price took resistance here, support here, and again resistance here. Multiple times, and lots of consolidation also here. Multiple times the price has spent a lot of time in this zone. So that is the reason this becomes the next important resistance. And also you will see that the price did take resistance at this level, after which it corrected. If we had chosen, say, a lower resistance level, what would have happened is the our position would have gotten stopped out. There's a good chance of that. We don't want that to happen. When this resistance got breached over here, we look for the most recent low, which is right here. We change our stop loss. Now what we have, by the time we change this stop loss, we have secured nearly percent profits in just 45 days in this position without using any leverage. So next what happens? We need to identify the next best resistance. So I move up the stock, I move up my resistance line, and I set it near the low of this consolidation, not there, here. So you can see that there's this entire zone before the stock topped out. Now this entire zone, basically, you want the base of this zone as resistance. So that is the reason why we set our resistance at the base of this very consolidation zone. Now, when the alert got triggered, I could notice that the stock has made 2 attempts to overcome this resistance. By far, we saw that the stock made 1 attempt to breach the resistance, but it overcame the resistance in the next attempt. Here we can see 2 spikes. Not only that, we also noticed negative divergence on the RSI. We also noticed the volume declining during this consolidation. So this gave us you can say this made us feel a little uncomfortable. So in order to protect our unrealized profit, which was quite significant at this point, we were looking at nearly 14% of unrealized profit. We don't want to risk all of that. The next step was to revise our stop loss to the nearest low. So this is somewhere where we saw the nearest low, and this is exactly where we exited it. Why? Because the stock fell down. Now you will notice that the stock again did not go above that resistance. The stock took resistance again above the level of 412, but it did not go above it. In fact, it breached the stop loss that we had set multiple times. In short, it was good idea to have exited the position. This is basically how we ended up booking nearly 20% profits in 68 days in the stock of JKPAPER. But now let's come to the present. I'm going to clean up this chart to show you a potential opportunity to buy the stock again. So you can see the stock again took resistance at this blue line. This faded blue line, this one is the 200 EMA of one time frame higher. So since this is the 75-minute time frame, the faded thick blue line means it is the 200 EMA of the one time frame higher, which is the daily time. So here the stock has taken multiple supports and started to go up. It has also forged a small higher high, which means the stock is ready to break out into a new bull trend. Moreover, the volume is also quite strong. So what we will do here is we will set up alert at the 35 level on the minute time, which means we are waiting for the stock to take a small correction. So when the stock takes a small correction of say around 2%, that is when we will start accumulating our position for the next possible leg of upside in JK Power. So remember, the stock has already, from the point of support that we just discussed, it's already moved 10% up. So if the stock comes down say around 2 to 3%, so we will try to accumulate a position in this range. You see the EMAs? So on the 15-minute time frame, we are talking about accumulating the position between the 50 EMA to the 200 EMA. And here the stop loss for us would be this very low. We will ignore the spike low, and this low would be our stop loss. 382. If you can manage even an average price of 398, the stop loss would again be 4%. And on the upside, we will still maintain the same target at the level of why? Because of this resistance zone. So you see, this is one resistance zone. This has been breached. So we are now aiming for the next resistance zone with the target of 450. And why am I asking you to be patient and accumulate your position rather than buy your position at once? Because if you see right now, your stop loss is around 7% and your target is around, which is not very attractive. So that is why you need to use accumulation style. You need to use an installment style accumulation here, where you will start accumulating the position when the 3-minute time frame goes back to the level of put and continue to accumulate that. So I would typically accumulate it in 25% installments. If you do that, you will ensure that your risk reward ratio is more attractive because your average cost will be lower. As a result, the distance between your cost and your stop loss will be smaller. At the same time, the distance between your average cost and your target will be bigger. So your risk reward ratio will naturally improve. This is a discipline, my friends. When you optimize for higher risk reward ratio, it automatically ensures that your entire trade setup is constantly of a better returns. And this discipline will serve you greatly in the long term as you continue on your journey of swing trading in the stock market. So this is all the discussion I had for you today. Now I'm going to turn to your comments and try to help you out to the best of my capability. Sandeep Parekh ji is asking me, when do we use the 50 EMA? So Sandeep ji, we use the 50 EMA as an indicator to identify support resistance. So you will see that EMAs have if you use mathematical factors, 50 EMA is multiplied by 5 is 250, which is almost the 200 EMA of the daily time frames. The 50 EMA is more useful on bigger time frames like the daily and the 75-minute time frame or the weekly time frame, less useful on the smaller time frame. So when you're using the smaller time frames like the 3-minute, 50-minute, you want to use the bigger moving averages like the 200 or the 500 more than the smaller time EMAs. So the 50 EMA has a more important purpose to serve on your daily chart, where when a stock is in bull trend, the 50 EMA acts as a good support for the stock. So there is a small reminder from the ET moderator. If you are interested in swing trading with me, be sure to subscribe to the swing trading subscription plan that I have on the GapUp platform. If you don't know what GapUp is, I'll take a minute to tell you about it. GapUp is an initiative by Wiggy and Economic Times together to bring SEBI registered research analysts like myself who have the necessary credentials, who have experience in the market. I personally have more than 12 years experience in the market to give you services so that you don't get sidetracked or misled by unregistered advisors. So click on the link shared by the ET moderator and make sure that you're only working with SEBI registered research analysts for your swing trading or stock market needs. Moving on, we have a HAL share long term ke liye. So we have a guest user. Usually I find it easier if members share their name, but since we have a shy member here, we will go with it. So looking at the chart of I think HAL की rally काफी हद तक हो चुकी है. I see it has rallied nearly 60% in less than 2 months. So remember, you want to always buy stock before the rally, not after the rally. In case of L, I also see negative divergence on the chart. as you can see right here. So I personally had booked my profits already, as you can see with this red highlight. The volume profile is also indicating that participation is reducing. Fresh entry in HAL for long or short term is not recommended at this point of time. If you're enjoying this live session, do give a thumbs up to this session. It will mean a lot to me. Shivansh is asking for Vedanta for short term. So I usually strongly recommend against stocks like Vedanta because of the corporate governance issues. And if you see here, again, Ved is also showing some loss of volume activity and is taking resistance from the 200 EMA on the daily time frame. So you see the 200 EMA was breached, and it was also breached with good volumes. Oh, but then again, the 500 EMA of the daily time frame is also there. Unless the stock sustains above the 500 EMA, I wouldn't be very optimistic, because if you look at this zone, here also the stock took resistance from the 500 EMA only and continued downside. So unless it sustains above the 500 EMA, it's not a good idea. On the other hand, if you take this example, the stock took resistance but finally breached. The day it breached above the 500 EMA, it shot up very strongly to go nearly 18% up in just 2 days. It did give you another opportunity to enter the stock again when it took correction over the next 2 weeks. But for now, I will suggest you to wait and see if the stock sustains above the level of 8. So we have another query for put on Orient paper. So unfortunately, I don't advise on any kind of FNO strategies. If you have any queries regarding cash segment, please do mention the stock name and cost price. I'll be very happy to help you. So data patterns. Is that the name of a stock or is that a question? Let's see. Looks like a stock. Never seen the stock before, so give me some time while I do some analysis. Let's draw a trend line using the cloning method. That looks like a pretty legitimate maiden trend line. We will clone this here. And then you can see that there is a pretty important support right there. So I see the stock is heading for the 200 EMA on the daily chart, and the volume is suggesting pickup when the price went up. So see, this is where I would say the volume started to pick up pretty much, not even here, from here. The volume has been picking up, and if you see, the price activity also has been bullish up to this point. Actually, up to this point, I would say the volume sustained itself pretty well, and then the volume declined when the prices declined, which means this 200 EMA around 1838 is a good point for you to make fresh entry. So I can see the accumulation has already started in the stock, and the candles have started to become smaller and smaller. The momentum is getting low. On the 15-minute time frame, positive divergence has already emerged, which is again a very early sign of a potential trend reversal, as we've already discussed. I would suggest data pattern is looking slightly attractive for the short term, but this stock is not part of my watch list, so I won't give a recommendation here. But since you've asked, please make sure you're maintaining a stop loss at the level of 50 for a potential target of 2141, because until and unless the stock doesn't forge a higher high, we can't be more optimistic. Now, you see why I will also not give a recommendation here. The risk reward ratio is not attractive. I don't want to risk 9% of my capital for only 10-11% of potential upside. For me, I would suggest that this stock is a no-go. We have Anurag, who's bought Garden Reach Shipbuilders, another new stock. Let's look at the weekly time frame to determine its direction. So I can see that the stock is in a pretty well established trend with very good volume profile. 100 EMA, 50 EMA both acting as strong support, and the volume pickup has just started again. So this stock is looking quite attractive. You want to make sure that you stay with the stock only as long as it is still maintaining higher highs. So your first stop loss is quite big. Actually, it's nearly 9% stop loss. But here, your potential target for the stock would also be around the level of 1058. But again, the risk reward ratio is not more than 3. So I, as a swing trader, maintain the discipline of only participating in trade setups where my risk reward is more than 3. This discipline, when maintained consistently, helps me deliver better returns on an overall portfolio level, irrespective of whether it is the bull market or the bear market. And it is through this principle and my analysis, I also run my Trade Together program, where I give active stock recommendations to retail traders like you who do not have the time or the skill set to do in-depth analysis the way I am doing. If you're interested in knowing more about my Trade Together program, I urge you to join my Telegram channel. The Telegram channel is called Trade with Kavita. I am dropping the link in the comment section for you to join right now. Alternatively, you can also go to Telegram and search Trade with Kavita and join the first channel that shows up. In this channel, I post daily quizzes for you to learn stock market through my lens. And I also have an ongoing offer, which if you go on the link, you'll be able to see. Since you have an active position in Garden Reach, I would suggest you continue to hold on to the stock. You also have a very good entry price. The stop loss that I said, 790 would apply to you. Please maintain the stock with that stop loss. And when the stock goes above the level of 1000, right, since 1060 is a potential target, when it goes above the level of 1000, please check in with me on my through Telegram for a potential for a reanalysis. If the stock is looking weak around the level of 1000 plus, then we will suggest either a revised stop or an exit, or we will give an extended target if the momentum sustains. Samuel Matthews asking, is IOC good to buy now? So I can see that IOC has rallied quite a bit, as has all energy stocks. But now the rally is unfolding on pretty weak volume. Also, the RSI on 75-minute time frame is indicating a bearish range shift. So I would not make a fresh entry in, and I would not recommend that either. We have Nikun Shah asking for Reflex Industry. He is holding it from 4 years. That is amazing. Let's see Industries. Oh, so I see the stock is quite illiquid and has given a very attractive up. Let's look at the trend analysis. So the stock is clearly in an accelerated trend, which means that it's not only breaking above key resistance trend lines, but it's doing it at a faster and faster rate. So my target for you would be Nikunj. My target for you would be 1263 or 1260 roughly on this stock. It is looking attractive for a next leg of upside for sure. Please maintain stop loss near the level of 500 on this stock. We have Kapil Sharma is asking for analysis of capital. I do see interest in the downtrend disseminating, and the 75-minute time frame is trying to move to the bull range, but not quite there yet. Oh, the 15-minute time frame is still quite weak, so I wouldn't trust it. I also see the 500 EMA is not too far. It looks like the 200 EMA has clearly been breached already with pretty strong volumes. I would definitely wait for the stock to come down to at least before I make my next move. ABC Capital long is not recommended. You have a long since 138. You've sacrificed a lot of your unrealized profit. In that situation, I will have to ask you to wait for the support of 500 to have a go at the stock. So please maintain your stop loss at break even. Now that you've lost already more than 20% of your unrealized profits, at least make sure that your own capital does not get lost in this. So maintain your stop loss at cost. Sunil Agarwalji, the entire session's recording will be made available to you within 2 days. So please join the Telegram channel so you don't miss out on it. I'm sharing the link to my Telegram channel for you in the chat. Karur Vaishya Bank. Let's see. What do we have in the KVB Bank? Strong underlying trend. But I can see that my potential target has already been met. The upside still looks pretty strong in KVB. I would recommend, what is it that you're asking? Whether it may go to 172. So 1 has already been touched, and it can definitely retest the level of 172 given the momentum that it is displaying and the momentum that the market is also displaying. But on that note, I would want to caution everyone a little bit. Because if you look at the chart of Nifty, right, usually I don't discuss Nifty in the Let's Get Technical series, but I noticed something today on the chart of Nifty, which I feel is very important to discuss. So if you see this last leg of uptrend which started since the 21st December, the volume has been pretty low. Now, I understand it's a holiday weekend, so there is a pretty good chance that I understand this is the holiday weekend, so there's a pretty good chance that the market is experiencing low volume because of that. But still, this concerns me. I would be very cautious of making fresh positions. I would only go make fresh positions where I have a lot of conviction. And on the active positions, I would make sure that all my stop losses are being trailed properly. Now, if you are someone who would like portfolio analysis, then I am also sharing the link to where you can is a request for portfolio cleanup from me. As I said, I'm a SEBI registered research analyst, and when you raise the request for portfolio cleanup, I will create a report for you, which will tell you exactly what to do in terms of hold your position, sell your position, or add more to your existing position. I will also comment on your existing allocation. So if you want that advice, you can also use the consultation link shared by the ET moderator, or I will drop the portfolio cleanup link for you in the chat. Please make sure you click on it. Also, with this, I'm going to have to wrap up this session because I have a hard stop. But it was great fun analyzing these charts with you and helping you out with your queries. If you had more questions, please do join my Telegram channel. That is the best way to connect with me. I will see you again on Friday in the Market Outlook series, where I bring to you analysis of Nifty, Bank Nifty, and the intersector analysis. In the meanwhile, thank you for being a great audience, asking a lot of questions, and liking this live series. I will see you again on Friday. Namaste.